Welcome back. I'm Pratap here. Today is the 3rd April 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. All the training videos are available in a playlist supply demand zone price action course at our NeoStock YouTube channel. Even I have provided the link to this playlist in this YouTube video description. So click the link, you will get into this page and then scroll down to the bottom of this page. Here starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. Even I have provided the link to our Telegram channel in this YouTube video description. So please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we will provide an update in that channel. Now let's get into the analysis discussion. So before we get into today's HLQ trades, and let's evaluate one of the HLQ trades from our previous videos. That is persistence. The reason is in my previous HLQ video, I have ignored one important point that we discussed, and then we will move on to today's session. And also one of the subscribers' question also I would like to address related to this persistent and high liquidity zone question. So this is a persistence. This is a daily chart. Here we have 75 minutes zone. Once we move on to 75 minutes time frame, you will get. So exactly in this zone, it is picking the orders. Because yesterday I was a bit busy. You might be knowing I'm not available in the market, so I didn't do detailed analysis. Today morning when I recorded the video, I just analyzed it based on previously drawn zone. So first let me show you the 75 minute zone. So this is the 75 minute zone. We have a rally, we have base candles, and again we have a rally candle. See, this rally candle is a hidden gap you need to add, hidden body. Then we get, and again you need to add hidden body. So here we have a leg out. So this is the way the zone is institutions defined. But our software is having intelligence, so it identified this zone. Okay, first hope the subscriber would have got the answer. Let me show you here. Is there really a 75 minute zone? I don't think so. There is a 5 minute zone inside 15 minute zone, but no 75 minute zone. Yes, here we have a 75 minute zone. See here. This is not a drop candle. This is a rally candle. Add the hidden body here. The gap is also not filled. If you add the hidden body, you will be getting a rally candle here and a wick on the top of that. Then you have 1, 2, 3, 4 base candles. And again add the hidden body. You will have another rally candle, high explosive rally candle. So here we have a 75 minute zone. I clearly explained you hidden body and hidden zones in our lesson 9. So please go through our complete training program. Some of you might have learned outside. And whatever the concepts, majority of the important concepts you learned, they are not good enough to understand supply demand zone. So how much time, if you already learned supply demand zone, how much time you need to repeat the course again? Hardly you may need some 2 weeks time maximum. Every day if you spend some 2 hours, within 2 weeks you can complete, but you learn so many concepts which you missed earlier. Some concepts you learned, but you don't know the fundamental reasons. Those fundamental reasons also are explained at many concepts. Once you complete the course, you won't be having any confusion. So my kind request to all the people who already learned outside earlier, and now again you are going through these software reports. Don't do that. First complete the course. You get plenty of opportunities, trade opportunities. Our software is every day it is filtering the stocks. And if you don't learn those concepts which you haven't learned earlier, definitely you will miss the important zones. The zones that really gives us good profits, you will be missing. Okay, now let's get into that. Let me say thanks to Swapnil, our subscriber, who identified this 15-minute zone which I missed from my analysis in today's morning video. So let me go to 15 minutes time frame. So within this 75 minutes, we have several 15-minute zones. This is the one I have drawn, drop, base, rally. This is the one I missed. The reason is this is the one we drawn earlier. And later on again this is created. Maybe somehow I missed it. I have drawn rally, drop, base, rally, and this I missed totally. Drop, base, rally. Actually this is zone I have drawn today morning only. Not today or... No, this is on 1st April, right? Yeah, this is drop, base. The rally candle is... both are from 1st April only. Okay, anyway. From my analysis, it is completely missed. So I must thank our subscriber. So drop, base, rally. So here inside again we have 5-minute zone. We have a rally, base, rally. And also we have RR, good RR here. Something around more than 1:3.5 RR is here from here to here. Here we have a 15-minute zone. Let me go to the 15 minutes time frame. We have a rally, 2 base candles and a drop candle. So this is the 15-minute zone is the target. And 2 trade opportunities it has given yesterday. This is the first one. Prices reached. Again prices came to this zone second time. Again reached the zone in the next candle. Next 15 minutes candle. If you go to 5 minutes candles, you get better clarity. So yesterday we got 2 trades in this zone. This is the first one. Prices came at 11 o'clock 5 minutes candle and reached the target at 11:20 candle. Again prices reached to this zone once again at 11:40 candle. Again it reached the target. I already told you earlier, within the same day, if prices enter into the same zone, you can take multiple trades. But only thing is how much order flow it is captured that you need to observe. See the first exactly from the digital line. Just 10 paisa inside only it went. Just 10 paisa inside it went. So a lot of order flow is still available. See next time again it went a little inside. Maybe another 30 or paisa or something inside or 40 paisa. Then again see the next candle. After next to next candle it reached. So this is the way we got 2 entries. And that way persistence has given 3,480 rupees profit each trade. And ROA is small, only 2.3%. So this is less than our average ROA 6%. Because from now onwards our average ROA should be considered as 6% till next 6 months. Okay, even the small ROA, we got multiple trades. 2.3, you got 4.6% return you got from the same stock yesterday. So this is one thing. And one more thing I want to show you. I already explained, but the HDFC. The HDFC bear trap. Sorry, HDFC bull trap. The other one is bear trap. Here bulls are captured. See, yesterday it has given, because this is the time prices were moving for a long period, and might be difficult to reach up to this level, the target. So this is the exit point, the blue color line what I have drawn here, because it's because it is acting as a support. If multiple times the same area prices are reaching and not allowing you to go, at some point of time you have to exit from your trade. You need to book the profit. And already from here to here it is around close to, more than 1:3.5 RR. From here to here, from the bull trap, that is bull trap supply zone, the 5-minute supply zone to here, already 1:3.5 RR is there, a little more than that. So this is the right place to exit, because prices are keep on testing for several times. If you missed here, maybe you should have exited. Okay, after that this line is this support is broken and further came down, but that is a different story. There is a possibility from here again prices will move up. That possibility is also there. So that's why you should have exited one of these areas, either here or here or here. And see, today once again prices entered into the same bull trap area, and once again institutions pushed the prices down. This 5 minutes bull trap is working very strongly. Even one more trade opportunity is given today. The reason is already institutions created a rally based drop, but we cannot consider this as a base candle. Reason is the range of this candle is very high. But maybe if you look into 1 minute area, definitely some zone will be here, 1 minute zone. If institutions keep creating zones, means they don't want to break this area. And moreover, it is a trap area. So today it would have given you again another, how much profit? Around 5,000 something. HDFC Bank. Yesterday it gave you 5,995. This is yesterday's trade. In case if anybody would have taken a trade, you would have got another 5,995, close to 6,000 rupees. Anyway, we are not capturing this data. Just I want to tell you how strong these traps are. I just want to tell you that point. Sometimes these traps also will break, but institutions are creating zones. That is an indication. It won't break easily. That is the indication. With that indication, we can take a trade. Nothing wrong. If anybody would have taken a trade today, you would have got another 6,000 rupees profit. So this is about yesterday's discussions point of view. Now let's get into today's. And today 2 trades are executed. And executed means triggered. And one is valid trade and another one is invalid trade. But both are stopped out. So the first one is a cub. This is a valid trade, but stopped out. When it is stopped out, we have to accept. First of all, what is this zone? 75 minutes zone. First, let me go to the 75 minutes time frame. This is a 75 minutes high liquidity zone. We have a drop, base, drop, and follow through candles are there. This is what our software identified, this zone. I'm sorry, before getting into this point, discussion, one more point I forgot to address. The question the person, one of our subscribers asked. Let me complete this and then we will get into the discussion. So anyway, I addressed this point. There is a 75 minute zone. Inside we have 5 minutes, inside 15 minutes. So it is valid, no doubt in that. So you got that leg in and leg out related things I shown you in the chart. The same leg in, leg out also you can find in our stocks near demand and supply zones video at 75 minutes time frame. That is a day before yesterday's video you have to refer. There you have leg in and leg out details. Now you are saying trend is down. Okay, let it be down. We don't care trend. in high liquidity zones. That is the power of high liquidity. We don't care about the trend. We don't care about the price direction. We don't care about the location. We just ignore everything. Even odd enhancer score also we don't care. Then what we care? Only RR we care. Whether there is RR, minimum RR is there or not. Because risk management is very important. That is the one we can't violate. But remaining all we violated. You just draw whatever the zone is, software is telling, draw the zones. Then what concept you have to do? Only one important concept. You learn in lesson 16. Fine tuning the zone. The rule is you should have a fresh, fine tuned 5 minutes zone. That's it. That is the only one thing we look in the high liquidity zones apart from RR, whether RR is available or not. If RR is not available, we will adjust RR sometimes. We know how to do that. We reduce the risk. Even then, if you don't get RR, we will just ignore that. So that is the reason why we don't bother about this. Anyway, you are going to learn high liquidity zones in our next lesson, lesson 21. That is the first lesson in the third phase of our training program. Probably mostly this weekend you will be learning the first lesson, or before the weekend starts also I may record the video depending on the availability of my time. You have multiple videos in lesson 21. So after learning all the videos you will understand high liquidity zones. I have defined a strategy. You have to use the strategy only for daily zones and 75-minute zones. Remaining zones you should not use. They may work sometimes. But success rate we cannot claim 80% minimum success rate. But these high liquidity zones, by ignoring the trend, by ignoring the price direction, by ignoring the curve, that is the location, even by ignoring the odd enhancer scores, by ignoring all these things, still they are all not supported. Still we take a trade, and during the intraday it will give an average ROI of 6%. I am saying average ROI. Sometimes you may get 8, 9, 10% ROI. Sometimes you may get some 2 or 3% ROI. See, yesterday's trades you have seen only 2.3% or 4% ROI. But on average you get 6% ROI during the intraday. That is the power of the high liquidity zones. Our NeoStock software is identifying them. Okay, it doesn't care whether you identify or I identify or software identifies. Ultimately, we are getting profits or not. That's it. Very simple. And a few trades, sometimes we will fail. See, today one stock is stopped out. That will happen. That comes under 20% category. We are claiming only 80% success rate. Even though the average success rate for the last 6 months data is 88%. Let us see next 1 year also how much average, whether it is maintained or somewhat it will go down, again somewhat it will go up, we'll see. But when I developed the algorithm with an aim minimum 80% success rate, we should get. That means every 100 trades, at least 80 trades should be successful. Only 20 trades should stop out. That was the objective. And this success should be based on fine-tuning the zone strategy, which I already explained in lesson 16. That's why always we look for a fresh 5-minute zones to take the trade. If 5 minutes is high liquidity, we will take multiple trades. That is also there, that possibility, 5-minute zone. That 5-minute zone is high liquidity or not, only our software can tell that. Manually it is difficult to identify. Hope I gave answer to your question. So forget about this trend for high liquidity zones. But when you are going for bullish trade setup, bearish trade setup, the other videos I am releasing every day for DIT trades or WIT or MIT trades, 2 videos we are releasing. In that video, all the zones, they are according to the trend. If trend is not supported, though in those reports, software does not display the zones. That is a different strategy. And that strategy is we have according to supply demand zone, we have at least 50 to 60% success might be there in that strategy. Even 40% success also, still you get good profits as per the risk management point of view. But high liquidity zone, after ignoring all these points, still it is giving you 80% success rate. That is the beauty of this concept. Look into that 6 months high liquidity zone videos I published on 1st April. We have all the statistics, and yesterday I even published the Excel sheet in the Telegram group. Look into the Excel sheet. All the trades you will be seeing. All the trades every day we are discussing in daily HLQ analysis. See in this Excel sheet, what data we have? Yesterday's CUB, it is failed. We got 1500 loss, which is 0.98 negative ROI we got as per one futures margin cost. So whatever HLQ sessions we are discussing, that data only we are entering in the Excel sheet. So any trade if you want to refer, you can refer the date, the HLQ zone trade. If you go to 14th February video in our YouTube channel, HLQ analysis video, there you will see the analysis on this particular stock. That way, based on this date, you can open the video in our, for all these trades, videos are available at our YouTube channel. Everything is transparent. Whatever we are discussing in the videos, that is only we are entering in the Excel sheet. So any zone you can refer. You can take any of these trades. Whether failed trades or successful trades, anything you can take. And you can find them at our YouTube channel, all the videos, all the trades. Okay, now let me get into today's discussion. CUB is a 75 minutes high liquidity zone, drop based drop, and this we fine tuned with 15 minutes time frame. Let me show you how I fine tuned. Here we have a rally candle, 3 base candles. That way you can consider, or you may consider this as a failed ERC candle. Still it is okay, because we have drawn a type 2 proximal zone here. So within this 15 minutes area, we want to fine tune to 5 minutes zone. And look into the 5 minutes zone. So this is an excellent zone, no doubt in that. We have a rally, 3 base candles and a drop candle. Sorry, this is the ERC candle. I'm sorry. This is the ERC candle. This is a leg in. We have 2 base candles and a drop candle. Why I am saying ERC? The length of this candle is a little bigger than the medium size candle, a little bigger. So this is the way we are planning a trade in this area. Those people who feel this 1% risk is high, still you can go for type 3 entry. That is also valid, as long as our risk management permits. But anyway, we are accepting it because my statistics are calculation based on at least 2% risk, and minimum 1:3 RR should be there. That is the way we are planning our trades. If RR is not sufficient, then we go for risk supports. RR is not supporting. At the time we go to type 3 entry. That way also we will plan. The moment you go type 3 entry, the risk is sometimes you may miss the trade. But you are getting RR, right? Even if you miss the trade, because your risk is not good or your RR is not good, at the time, if the prices come, you will take a trade. If prices doesn't come, you don't take the trade. These are the techniques you should learn. You should understand. And see, this is a fresh zone. Prices never entered into this zone. So that's why you can plan a trade. But what happened today? It is failed. And can we accept this trade first of all? This is a 15 minutes target zone. This is the 15 minutes target zone. Sorry, this one. We have a drop, base candles, and a rally candle. This is the target. See here, RR we have 1:4.25 RR is there. So which is excellent. Definitely this is a very good trade. We should not miss this trade. So such kind of trade it is. But what happened today? In this zone, prices entered. After that, see what happened. A rejection has come from here. After that, prices came down. But again, they were pushed up. I will explain with 1 minute, you will get clarity, better clarity. Because you should understand what really happened here. See, the prices just entered. See the push. See the rejection. The order flow is very strong. That's why you cannot doubt on this particular zone. This is a good zone to trade. But at the same time, today what happened? Institutions, especially the bulls also very strong today. They are also not letting the prices go down. See here, prices are moving in a narrow range. When there is prices will be moving in a narrow range when there is a fight between two institutions. Two means it need not be two. A group of two types of institutions. One type is a bull and another type is a bear. Maybe there could be some 3 or 4 institutions might act as a bulls. Another 3 or 4 institutions or 5 institutions might act as a bears. That possibility is there. That's why the group, they'll be fighting here. Some people, they don't want prices to go up. Some people, they don't want prices to go down. That's why prices are moving in a narrow range. How much time it moved? Almost in an hour. See here, at 12 o'clock 20 minutes, we got the entry. 12 o'clock 20 minutes. And this is 13:15. 13:16, 13:17 violated. Almost very close to 1 hour, there is a fight between institutions. That means almost 1 hour this zone holded the prices. Because it is having a strong order flow, it holded the prices. And here you should get an indication. Generally, high liquidity zones, what happens? Prices enter into the zone and they come down. Maybe if there is any bulls are trying to stop the fall from here, maybe some fight will take place. Maybe it could be some 10 minutes or 15 minutes. After that again, bears will push the market and once again prices further will go down. Again bulls will come and they will try to stop. Again some fight will take place. So, maybe for some 10 minutes or 15 minutes or 20 minutes maximum. Or even half an hour also maximum. Then again bears will take control and finally it will reach our target. And by the time all the bears will become weak, now bulls will take domination from the demand zone. Again it will push the prices. This is what we see most of the times in high liquidity zones when we are trading during intraday. But today you see the difference here. They are not letting the prices go down from this area. Maybe after half an hour, if you feel doubt whether really this is going to work or going to violate, what you can do, where the real support is coming, institutions are not letting the prices go down, there you draw just a line. And here you can exit. Definitely this is first half an hour. This is 12:20 and this is 12:44. So within the half an hour, mostly you don't want to exit because we have a hope. But see here, last exit opportunity we got here. When at 1 o'clock, so almost 45 minutes, there is a fight here. If we really sense something wrong is happening here, bulls are not letting the price go down, it's better to exit from the trade. If you get the doubt, here you got an exit point. If you would have exited, you would have got 1:1 RR only. But still, it is a profit. Profit is a profit, right? You are expecting a 1:3 or 1:4 RR. But that is not happening. When that is not happening, immediately you should alert. And moreover, it is at 1 o'clock. So we are nearing to the closing hours, last 1.5 hour of the market. And during last 1.5 hour of the market, you can't take much risks. You have to take a decision whether to stay in the trade or to exit from the trade. If you have confidence that definitely bears will take control and they will push the prices down, then you can hold. There is nothing wrong. But such kind of decisions, if you take morning at 10 o'clock or 11 o'clock or 12 o'clock, that makes more sense. But at 1 o'clock, thinking still bears will be taking control and it will reach your target. If you think like that, that probability is less. I'm not saying it is not happening. I'm not saying it won't happen. It might happen. Your analysis, whatever you are thinking, the bears may take control and again they push the prices down. That will also happen. But probability is less. That is the point you need to understand. That's why it is your call. So better to exit and limit with very small profit or negligible profit, if you think like that. That is one exit option you got at this blue color line. Still you feel, okay, let me wait. Maybe, because what is the guarantee that bulls will take control? Bears also can take control, right? And moreover, this is a high liquidity zone area, fine-tuned area, fine. But fine-tuned area only. But see, already one test, the second test, at least during the intraday, maximum 2 or 3 you can accept. See, this is the first test. This is the second test. This is the third test. Each test, it is letting the prices to get into this blue color line. See, the first test, prices reach to the blue color line. Second test, prices reach to the blue color line. Third test, prices reach to the blue color line. In such kind of situation, you should think in a wise direction. We have to think in a wise direction. This is a lesson for all the upcoming traders. All these price actions you need to observe. Price action means what? Understanding the behavior of the price movements. That behavior you can study in different formats. Demand and supply zone is one area that is helping you find institutional order flow. But beyond that, you need to study the price action. The price patterns you need to understand. Where exactly the bulls are dominating, where exactly the bears are dominating. That perspective also you need to think. Definitely here, maybe at 1 minute time frame, you may find a zone. Even in 5 minutes, yeah, this is 1 minute, right? Yes, see here. Here we have a zone. Demand zone. This demand zone is holding the prices. Definitely this could be a high liquidity zone. This 1 minute high liquidity zone. Don't underestimate 1 minute high liquidity zone. You may think it is okay, 1 minute level, its lifetime might be small. Yes, its lifetime is small. But you never know how strong the order flow inside this zone. There could be pending orders, or institutions might be keep on adding new orders. You never know. New orders if they add, that is very dangerous. It won't reflect in the price actions until the next time prices reaches here. So that means the point we have to understand, we got 3 opportunities to exit. Each time prices entering, this 1 minute zone is holding. Next time prices enter, this 1 minute zone is holding. See, most of the times what happens, these small zones will be violated easily. But that is not happening here. When that is not happening, immediately you should think, why it is not happening? What's wrong here? There is nothing wrong here. Institutions created a very strong, high liquidity 1 minute zone. Can we say this is a guarantee 1 minute? We don't know, because at least based on multiple price actions, the multiple supports, we are assuming this could be high liquidity. See, every time prices are entering, see the rejections from this zone, 1 minute zones. See the rejections. See the rejection here. Again, last time when it came, see the rejection from here. After that, prices moved up. And finally, the supply has given up. Now, institutions, they pushed the price. They might have added more order flow here. See all these candles. And finally, still it holded for some time within this, for about 2 minutes or 3 minutes, and finally lost. Probably institutions kept the strong order flow at this proximal line area. That's why in the top there is no strong order flow. It's it is pushed up. Or maybe there is another possibility. If institutions kept any strong order flow earlier here at the distal line, maybe they might have cancelled also. That possibility is also there. They will also get an idea. They are unable to break this 1 minute zone. When they are unable to break this 1 minute zone, probably they know some institutions, they keep on adding orders in this area. That is the beyond the capacity of these bears. Supply zone is bears, right? Beyond the capacity of these bears. When we have such a strong order flow, they may change their analysis also. That possibility is there, I'm saying. Because of what kind of decisions they take, we cannot confirm. Only we can assume. If any order flow is there, they might have cancelled it. That's why easily from here it's gone. And initially the order flow in this area is consumed by these bulls. Each time, whatever the order flow, it is consumed. 3 times it came. During intraday, if price entering 3 times, beyond up to 3 times or beyond 3 times is danger. First time or second attempt, generally we take short orders. Third time onwards, taking short order during the intraday on the same zone is risky. See, yesterday we have seen, right? Persistence. 2 opportunities. Third opportunity definitely we would not have taken. In case if prices came third time, definitely we would not have taken. Maximum allowed during intraday on the same zone is 2 times, not beyond that. If prices go deep inside, second time we don't take. We don't take. If they go very deep inside, somewhere up to the middle or little above the middle, if the prices go, we don't take second entry. Just at the proximal line, the first entry. Second time, see, they went a little more inside. Third time, even more inside. And finally, it is broken. So when it is broken, and if you don't exit, you have to accept the stop loss. So why we are keeping stop loss? When our analysis fails, that is the time we need to exit. But if you would have done this kind of analysis, see, first time it is tested, second time it is tested, third time it is tested, every time they are holding at this 1 minute, it's better let me exit. Third time when it is tested and reaches this zone, better to exit. If anybody would have felt, they would have got 1,500 rupees profit. Exactly 1:1 profit it has given. There is no rule that you should not exit. At the time of planning, 1:3 is the minimum. But due to any reasons in the market, due to changes, dynamic changes in the market, you may exit at 1:1, you may exit at 1:2, or you may still hold until it reaches 1:3. That is all depending on the dynamics in the market. You need to observe. If you are a full-time trader, this is what you are supposed to do. It's not that taking the trade, keeping quiet and waiting when it will reach my target. That is not the thing you have to do. Every minute what's happening, the price actions you need to observe. But you should control your cool. Because you should not be excited and exit here itself. There is a 1 minute zone. Okay, let me exit here, it reached. You should not take such kind of blunt decisions. Most of these 1 minute zones will violate. Most of the times. If not first time, second attempt, it will violate. But today that is not happened. It's keep on holding here. That means something wrong here. That kind of some flash that should trigger in your mind. Then you should carefully observe. So here it is taking an entry. Here again it is coming from holding the prices. Again taking the second entry. Again reaching here, holding the prices. Taking the third entry. Again it is reaching. You have a decision to exit here or not to exit. Suppose if you took a decision not to exit, today your stop loss is hit. That way you got cub 1,500 rupees loss, which is 0.98% negative ROI as per one futures margin cost. So you have to accept that. See, high liquidity zone's point of view, it is failed. RR is supported, still it failed, so I have to register in my Excel sheet. But if you are an intelligent trader and you are observing every minute point, intelligent means, I'm sorry, that is the wrong word. We are all intelligent people, no doubt in that. If you are an experienced trader, that is the right word. If you are an experienced trader and if you are observing price action properly, these kind of things you have to observe. And if you are a beginner, learn from these kind of observations. Today, whatever I explained for this trade is a good lesson for you people. The two important points you have to observe, apart from it is holding, this trade is happened at 12 o'clock 20 minutes. And by the time it reached 1 o'clock, now we are nearing to the market closing hours. Only 1.5 hour trade only there. So when it is keep on holding 1 minute price, whether still we need to look for reaching this target or here itself we need to exit. You have to take a quick decision. If you ask me what decision I take, definitely I would have exited here. Anyway, I am not into the trade today. Definitely I would have exited here. Why I would have exited? Because of the time, market time. And a number of times it is a testing here. Number of times it is a holding. How many times it holded? See, in this first candle, second candle, third candle, fourth candle. This is closed inside. Fifth candle, sixth, seventh, eighth, ninth, again closed inside. Again 10th, this is 11th, and this is 12th. And this is 13, and this is 14, 15, 16. That's it. This is the last opportunity. After that, price didn't enter into this zone. 16 times it gave rejections from these zones, maybe small rejections, because the distance between this 1 minute demand zone and supply is very small. Obviously here, more supply is here until this particular point. Now demand is dominated, finally zone is violated. That's it. But why I am saying it is a good trade? Because we got a very good RR, 1:4 RR. Because we have a very good RR, definitely this could have been. Because bulls dominated today and they decided to break, they created a high liquidity zone here, and with this high liquidity zone, they violated the 75 minutes high liquidity zone. That's it. And next one is the Bank of Baroda. This is also triggered last minute. Last half an hour it triggered. the last half an hour or 1 hour, still we can take a trade. I told you earlier. First of all, let me show you, this is a 75-minute zone, Bank of Baroda. So here we have a drop, 3 base candles and a drop. So excellent zone. Inside this 75 minutes, we fine-tuned with 15 minutes. See here we have a drop, 1, 2, 3 base candles, again a drop candle. So this is also excellent zone, 15-minute zone. Inside 15 minutes, we have 5-minute zone. We have a rally candle, we have a very good base candle, and we have a drop candle and even follow through candle. Excellent structure. Okay, here you can plan like this. Actually, this is the way we plan, type 2 plan. Why I have gone for type 3 also I will explain. Here also you have some learning. Please observe. So this is what the trade you want to supposed to take. And what should be your target is supposed to be? The 15 minutes target. So where is your 15-minute zone? Here you have a 15-minute zone. Sorry. We have a rally, base, rally, ERC candle. This is target, your target, 15 minutes target. But when prices entered into this zone, now I am shifting to 5 minutes. When prices entered into this zone at 14 hours, at 2:20. That means almost we entered in the last hour of the trading. Last hour of the trading, I clearly told you, if you want to plan your trade, you should not look for 15 minutes target. You have to look for only 5 minutes target. So that's why there is a 5-minute zone. Rally, base, rally. Now if I want to plan a trade, RR should be there, right? Minimum. The only criteria is not the trend. The criteria is not the price direction, not the location, not the odd enhancer score. The only criteria is RR should be there, a minimum RR. At least 1:3 RR. If you are a highly experienced person, maybe you can take up to 1:2.5. Okay. So what is your entry? Maybe a small buffer little before. Here some buffer for stop loss. Approximately I am calculating. See what is the RR? You got a 0.96. Not even 1:1 RR is there. Okay, because RR you cannot take, what you can do? You can do adjustment. What is the adjustment? Instead of instead of proximal 2 entry, can I take proximal 3, type 3 proximal entry? That is your highest body for supply zone. Now risk is reduced. Further, your reward also will improve. And let us check. Now we need to adjust. Now exactly at, you don't require any buffer now. Entry buffers is not required. Exactly if it comes to that, you will take, otherwise you will leave the trade. That is our goal. But stop loss buffer is required. If you take a trade. Okay. So how much? We are getting 1:2.1. 1:2.1. That means 1:2. RR is there. When you have such a small RR, it's quite risky to take the trade. That too, this is the last 1 hour trade. If you want to improve RR, this is how you can adjust. See, if you take a trade here, entry like this. Within this area prices reaches, you want to take a trade. When you can do such kind of things, adjustment and all, in the morning session up to 12 o'clock, you can do such kind of risk you can do, because volatility will be very strong during the morning session. That's why mostly it will work, such kind of adjustment. See, using the tool, I am reducing the risk. Wherever 1:3 I am getting, there only I want to take entry. Here 1:2.92 approximately I have drawn, so that means close to 1:3. Let me draw a blue color line here, you get clarity. If prices cross this area, then only want to take a trade, otherwise you don't want to take. Such kind of adjustments you do before 12 o'clock morning session. But don't do such kind of adjustments exactly during last hour tradings. Yes, you can do trading sometimes when you want to take a crazy trades. Previously once I didn't remember the stock name, but I took a crazy trade during last half an hour by doing all such kind of nonsense adjustments. That day successful. But it won't work every time. That's why you should be very careful. But you as a beginner, always stick to the type 3 last. Do not do any adjustments beyond the type 3. If the adjustment, even last time also when I did the adjustment, it's not beyond the type 3. Between type 2 and type 3 levels I did the adjustment. Beyond the type 3 adjustment is always risky, because you are going very close to the distal line. So it's quite risky. So because it is not having even type 3 also, you are not having sufficient RR, you better reject the trade. And moreover, this is last 1 hour trade. First of all, we don't take last 1 hour trades. Still, some people who wants to take higher risks and don't want to miss the trade opportunities. For their point of view, you have to plan only 5 minutes target only. Your RR should be, if RR is available till 5 minutes, you can plan. And moreover, see the demand how strong today. So easily violated. Entire zone is violated today. The 75-minute zone is also violated. Because this is the only one area supply is there. But the supply is also not very great. Sometime, see here came down and again pushed it down. And after that again picked up and went up. If you look into 1 minute candles, you will get clarity. It has given some resistance. In this candle, in this candle, in this candle. Now in this candle reached till the distal line and there is a push and no more order flow. Next candle easily violated. Now here institutions created 1 minute supply rally base drop. For some time it holded the prices. They created a strong order flow here. The bears, they don't want this high liquidity zone to be violated. That's why they created. But their strength is not good enough compared to the bulls. See the bulls how strong. Here they added a very strong order. That's why sometime it holded the prices in this area. See the supply zone also 1 minute pushed the prices till the 1 minute demand zone. Again it moved. Now again created institutions, new zone and again pushed and further pushed. Finally this zone is violated. And after that institutions, bears, they give up. So that's it. This is what happened. And the remaining stocks, there were no trades, but we will discuss. The first one is a Nifty Mid Cap Select. This is a indices. It is there in the F&O segment. Already we took a trade here. This is Wednesday, 20th March. We took a trade. Let us check the Excel sheet. Here, see here, 20th we took a trade, HLQ zone trade. 19th our software has given this report. 20th we took a trade and it gave 8.5 times return, intraday return. But any swing traders would have holded this. See how much return it has given. It is over 750 points move it has given. From this 75 minutes zone to this daily supply zone, It has given 750 points move. 750 plus actually. Some 780 or 790 points move it has given. Swing traders, how many days they holded? 1, 2, 3, 4, 5, 6, 7, 8, 9. If they would have holded 9 trading days, including holidays, maybe it could have been because we have a lot of holidays during last week. So probably maybe 15 days they might have holded. This is on 24th, right? March 24th, and today is 3rd March. So 31st, we have almost 15 days. We should have holded this zone. Then they would have got a very profit. This is for the swing traders' point of view. But intraday, we got a good move on that day. See the rejection after that. But here high liquidity supply zone is there. We have a ERC candle, two base candles and a drop candle. This is how we created a daily zone. Inside this daily zone, we have a 75-minute zone. See, we have a drop candle, 1, 2, 3, 4 base candles, and again a drop candle, follow through candles. So we have a very good 75-minute zone. Inside, 15 minutes zone also there. Let me show you that. See, here we have a leg candle, leg in ERC candle, base candle and a drop candle. We have drawn a zone here, 15-minute zone. Inside 15 minutes, 5-minute zone is there. Actually, 2 5-minute zones I identified. One could be a high liquidity zone. I'm just thinking, not sure. This is a ERC candle. After that, one base candle, drop candle. This is 5-minute zone. See here again 1 minute rally, 2 base candles and a drop candle. Actually, this entire 15-minute zone and even 5-minute zone, they already picked up from this zone. Probably strong order flow might be there here. So you need to combine both as a LOTL zones. That way you can plan. If you feel risk is very high, you can take type 3. By combining these two zones, you can plan type 3 related entry. That way also you can plan. This possibility is also there. But today, prices did not enter into this zone. Next one is JK Cement. This is also a daily high liquidity supply zone. Actually, JK Cement is listed. Sorry, not supply. Did I say demand zone or supply zone? This is a high liquidity supply zone. And if you look into that supply zones list, daily supply zone, 75-minute supply zone. In both, JK Cement is listed. This is the daily supply zone. We have a rally, 1, 2 base candles, even third one or fourth one also. Actually, these are the leg candles. They are also considered as part of the base. The reason is software consider them as medium size leg candles and they put them. So actually software consider these two as a small candles. Small size candles. These two medium size candles. Because this is completely came out with a gap. There is a small gap is here. The hidden body if you add. So completely out of the zone. This is considered as a leg out. That's why we got a very big zone. And inside again a 75-minute zone, high liquidity zone is there. Let me show you how it is. This is the 75-minute zone software has identified. Stocks near 75 minutes. Actually we have stocks near demand zone. Stocks near daily supply zone, high liquidity supply zone, and also stocks near high liquidity 75-minute zone. In both the list, this stock is listed. We have a drop, base, drop, again drop, base, drop. Here drop, base, drop is also there, but I ignored it. You know the reason. This is a Saturday trade candle. That's why I just ignored. I didn't look into this. Even the next 15-minute structure also not good here. 15 minutes or 5 minutes, one of those structures. And one worrying factor in this area is this price action. But after that price moved up, then a base candle and a drop candle. This is the way 15-minute zone I have written. And this is another high liquidity 75-minute zone inside. This is the 15-minute zone. We have a rally, two base candles, drop candles. This is the way I consider this. And here again we have a rally. This is the rally candle, ERC candle. 1, 2, 3, 4, 5, 6 candles I consider just to check whether there is any order flow in this area. But the 5-minute structure is very bad. Actually here itself we got clarity. But I want to see whether really anything is there inside. So I marked that zone. See, the 1-minute structure is very bad here. All these are all base candles. So these kind of zones will be violated easily. But here, drop, 3 base candles drop. This structure is good. And here also drop base, drop follow through candles. This structure is also good. And see the structures here. Saturday candles. The Saturday candles are very bad. The special trading day. So this is one of the reasons why I ignored this zone. So this is how I planned ZK Cement, but today prices did not enter into the zone. Next one, power grid. Power grid I explained you in 2 days back. I think yesterday or day before yesterday's videos. I explained power grid. So please look into that analysis. So I don't want to repeat this analysis again. And next one is Page Industries. This is also 75-minute zone and not comfortable with this zone. We have a drop base, drop. This is what software identified. But inside 15 minutes we fine-tuned, but 5 minutes I did not. And already it is violated according to this candle. So no plan. But here demand zone is also there. There is a demand zone, 75 minutes demand zone. We have a rally, 3 base candles and a rally candle. This fine-tuned with 15 minutes. Actually the 15 minutes order is picked up from here. Drop, 2 base candles, rally. This is the area the entire order flow is picked up. Already there are candles. Drop, base, rally. And every time orders are picking from, probably this could be a high liquidity area. Maybe. Just thinking. Go to the 5 minutes. Then you will see. You have a drop here. This is the drop candle, hidden body. You add the hidden body. This is a drop candle. Base candles and a rally candle, follow through candles. Again prices came here, picked up. Again prices came here, picked up. Again prices came here, picked up. Again prices came here, from here it picked up. So this is acting as a very strong zone. Maybe this could be a high liquidity zone area. That is what I am thinking. So that's why maybe if you those who want to take a risk, maybe you can plan again another trade, because already tested several times. Anytime it will violate. That possibility is there. Only people who accept high risk can accept. High risk means not our trade risk. The general risk I am talking about. And next one is SBI Life. This is a 75 minutes zone. Demand zone. We have a drop, 4 base candles and a rally candle. And inside we identified 15-minute zones, several 15-minute zones. And 15 minutes and 5-minute zones are there, several. This is the first one, drop, base, rally. This is the second one, drop, base, rally. And here again recent price action. You have a drop, 2 base candles and rally. This is the recent price action. Now go to the 5 minutes time frame. Inside we have identified 3 15-minute zones. So each 15-minute zone we have identified a 5-minute zone. This is a ERC candle as a leg candle, base candle, rally and follow through. So this is one 5-minute zone. This is a fresh zone, not tested yet. And here again you have a ERC candle as a leg in. You have 1, 2, 3, 4 base candles, rally candle. Next candle it picked up the orders, prices went more deep inside. Maybe it is risky to plan a trade again in this zone, because prices went very deep inside. So that means the one below you need to plan your trade. But recently again another zone is created here. You have a rally candle, 2 base candles, rally and follow through candles. This is a 5-minute zone you can plan a trade. But today prices last minute entered into the zone, but they didn't enter into the fine-tuned area. From here itself it moved up. There was a 15 minutes area here, but already picked up the orders from this candle. That's why we didn't focus on this area, because this is already tested. This is only a fresh 5 minutes area is available here. Today prices didn't reach up to this place. And Bank of Baroda and CUB we already discussed. So we have completed all the stocks. So I think a lot of learning you had in today's session, because minute level points we observed in this particular video. So whoever listened this video, especially the Bank of India and the CUB, both the stocks you had a very good learning. Especially our experience, slowly it will grow up now. When you observe such kind of price actions in the coming days, slowly you will understand the overall market in a much better way. No doubt in that. Hope this information is useful to you. This analysis is helpful to you. Let us all meet again in our next video. Thank you.